This is 2011 question 7. It's a tabular statement and it's a 100 mark question. So you start off by ruling out your tabular statement. You need to have 14 columns for this question. There is no March, so you're going January, February and then straight on to April. If you want, you can have 2 December columns if you wish, because we will have one adjustment along the way that we'll be coming back to in December. So if you want to have 2 December columns, that's fine. I'm going to go with the solution from your exam papers, which only has a December column, but I'll use a highlighter to differentiate what would actually go into the second column if you wanted to use 2 columns. So you start off by getting all your opening figures from the question, okay, and we're starting off here with land and buildings. So you need to put in your land and buildings figure on its own at cost, and with underneath it then put in the depreciation. So in your balance sheet you can see that the value of land and buildings is 550,000 and your depreciation is 11. So you're showing your depreciation as a minus. Then you've got your vehicles in your balance sheet there at 38,000 and our depreciation as a minus 20,000. So obviously the difference between those two is your net book value. Your equipment then is 10,000 and again the depreciation on the equipment is €1,000. Goodwill we don't actually come to until we're doing the actual adjustments or going through the different transactions, so it's likely that you will have that at the end, and that's perfectly fine. It doesn't need to be up there. Then we've got stock at 80,000, we've debtors at 80,000 and provision for bad debts at 4,000. So if you look in the balance sheet, you're actually given one figure of €76,000, and the €76,000 represents the debtors when the provision has already been taken out. So that €76,000 is actually only 95% of the debtors. So divide by 95 and multiply by 100 to get your debtors figure of €80,000. Okay, and then obviously the provision is 5% of that, so 80,000 multiplied by 5% will give you your provision of €4,000. Sorry, that comma's in the wrong place. So you'll see your debtors figure is 80,000 and your provision is 4,000. You need to show them separately. So your debtors and then your provision as a minus figure underneath it. Do not put in the 76. You need to put in the 80 and the 4,000. Then with your liability, so you put all those in and then you total them up. Your total assets are €722,000. Then your liabilities are everything that's in the finance by section, and your current liability. So your share capital, you're only putting in the issued amount. We don't care about the authorised amount really. We're just showing the issued figure of 440,000 shares. Your share premium then of 20,000, that is when someone pays more money than what the share is actually worth. So for example, if the shares are worth €1 each and someone pays 120, the 20 cent will go into share premium and the €1 will go in there. So you split it into share capital and share premium. Profit and loss then, that's coming from the finance by section of 170,500, and then these guys here are your current liabilities, so your creditors, your bank and your expenses due, and they're all from the question. Rent receivable and reval reserve we will see as we go through the question. So now you're ready to start going through your transactions. You do them one by one, and as you go through them you pop them into the tabular statement. So the first one is, in January, More Limited decided to revalue the land and buildings at €700,000, which includes land valued at €90,000 on the 1st of the 1st 2010. So don't worry too much about that land value. That's only telling us that for when we're calculating the buildings depreciation. So start off, your current value of the land and buildings at the start of the year was €550,000. Okay, and we want to revalue them up to €700,000, which means we're increasing the value by €150,000, and we're going to add that to the fixed asset value. Okay, so we're adding that to the land and buildings in the tabular statement. When a revaluation takes place, all of the previous depreciation gets taken out of the accounts and goes into the revaluation reserve. So at the start of the year we had depreciation of €11,000. We're going to take that €11,000 out because when the revaluation happens we take all the depreciation with it, and we're going to add the €150,000 plus the 11,000 into the revaluation reserve, which gives us a reval reserve figure of €161,000. So what we're going to put into the tabular statement here is we're going to increase our fixed asset, our land and buildings, by €150,000. We're going to take the €11,000 in depreciation away, and we're going to create a revaluation reserve where we're going to put €161,000 in, and we should then see the balance assets and liabilities. Okay, so let's have a look and see what this looks like. We have land and buildings of €150,000 being increased here. We're taking out our depreciation. So as you can see there, our depreciation is sitting there at minus. So how do I bring a minus 11,000 up to zero? I need to add the 11,000 in. So just be careful of your pluses and minuses there. So €150,000 is bringing the valuation of the land and buildings up to that 700,000. So it's the 550,000 plus the 150, which is 700,000. I'm bringing my depreciation down to zero. And I've just increased my revaluation reserve there of €161,000. And that's that one done. So my assets are increasing by 161 and my liabilities are increasing by 161. Okay, so the whole thing about these tabular statements is if you've got an asset going up, then another asset has to go down, or else a liability has to increase. So these two should always be the same. It might be that you've got a figure in both. You might have a dash, like no adjustment might have happened. So now we're on to February. Let's put this back here. So what happened in February? Well, it says Moore bought an adjoining business on the 1st of the 2nd, 2010, which included buildings of 200,000, equipment of 30,000, debtors of 8,000 and creditors of 40,000. The purchase price was discharged by granting the seller 180,000 shares in Moore Limited at a premium of 20 cents per share. So the whole thing is here, we'd bought a new business, so all of those assets and liabilities are automatically going to be put into our balance sheet. But we need to check and see, was there any goodwill when we purchased this new building? Did we spend more money on it than what the actual value was? So first thing you need to do as well, how much did we actually sell it for? How much was the value of the shares that we gave out? So we gave out 180,000 shares at €1 each, but we know there was a premium of 20 cents. So the 180,000 shares, they're all valued at €1 each. Okay, so that's obviously €180,000. Now, the premium is where we need to be careful. So there was 180,000 shares and they were sold at a premium of 20 cents. So there was an extra 20 cents paid for each of those 180,000 shares. So 180,000 by 20 cents is €36,000. Okay, so the purchase price, the value of the shares was the 180,000 plus the 36, which is €216,000. Okay, so we paid €216,000 for this business. Now let's check and see what the business was actually worth. And this is the same as how you would calculate goodwill in your incomplete records question. So add up all the assets, they're adding up to €238,000, and that's coming from your buildings at 200,000, your equipment at 30, and your debtors at 8,000. So that's your 238,000. We only had the one liability when we bought the business, which was the €40,000 in creditors. So 238 minus your €40,000 leaves us with a net worth of €198,000. Okay, so the business was worth €198,000. Well, we spent €216,000 on something that was worth 198,000. So obviously there is goodwill there of €18,000. Okay, so what has to go into the tab? We're going to say, well, we issued these shares. Okay, so the €180,000 is going to have to be added to the share capital. We have 36,000 in share premiums that needs to be added to the share premium. And then we've goodwill, and goodwill is an intangible fixed asset, so that's going to go up with the assets. €18,000 will be added in, and then you also need to remember to add in every other asset and liability that came with the new business. So let's have a look at the tab and see how that looks. Okay, so the first thing is we'll go in order. We've land and buildings. Yes, a new building of worth 200,000 came when we purchased the business. Equipment of 30, that's gone in. We have the goodwill, you'll probably have this down here. So goodwill of €18,000 and your debtors of €8,000 that came with the business. So my assets are being adjusted by €256,000. Let's see what happens in the liabilities. We have share capital of €180,000, so that's increased. Share premium of 36. So as you can see there, our share capital was 440 and we've increased it now by 180. So the current amount of shares that we've issued is those two figures added together. Again, similar with our share premium. We had share premium of 20, now we've got another 36, so our share premium total now is €56,000. That's how it works. So these are the adjustments as we go along. Creditors, we've got more creditors of €40,000 with this question. So Those three figures added up, it gives me my 256, which is the same as up here, and that's what you're hoping for in this question as you go through the months. And we've no March, so we're going straight on to April, and that is that the management decided that the provision for bad debts should be raised to 7% of debtors. So we need to check and see, well, first of all, what is the value of our debtors in April? Like, what is the value of them now? Well, we had €80,000 worth of debtors at the start of the start of the year, and then when we bought that new business, they increased by another 8,000. So our current value of our debtors is €88,000, and we are saying that 7% of those debtors probably will not pay us. Okay, so we're setting money aside in case they don't pay us. So 88,000 by 7%, and that gives you €6,160. So that's the new provision figure. So we are reckoning that of the 88,000 that's owed to us, 6,160 will not be paid. Okay, and we're setting that money aside. So our old provision then, check and see what was the story with our old provision. Well, we started at the start of this question, and we figured out that the old provision was €4,000. So we're increasing our provision by €2,160. So if you were doing a question 1, or if you saw a bad debt provision anywhere else, if there was an increase, you put it in as an expense. So that affects our profit and loss. So the first thing you're going to do is you're going to adjust your profit and loss balance by 2,160, and it's an expense, so that's going to reduce your profit and loss. So we're going to have a minus of 2,160 in the profit and loss balance, and we already have sitting in our tabular statement at the minute a provision of €4,000. We need to bring it up to €6,160, so we're going to need to add that 2,160 to the existing provision. Okay, so let's see how that looks. Well, we have here, first thing we're going to do is our bad debts provision is increased. Okay, so we've got a minus 4,000, and I need to get that up to a minus of 6,160. So how do I do that? I have a minus of 2,160. Again, just be careful of your plus and minuses there. That could be where you fall. Your profit and loss balance, well, we have had to increase our provision. Okay, so that would usually be an expense, so that's going to be reducing our profit. So we currently have a profit of 170,500, and because we have increased the provision, it's going to go down by €2,160. So both our assets and our liabilities are both going down both have a minus of 2,160. Okay, next then is May. A vehicle which cost €25,000 was traded in against a new vehicle costing €35,000. An allowance of €20,000 was made for the old vehicle. Depreciation to date on the old vehicle was €5,500. So this is a disposal. Okay, so let's have a look. A few things you need to be careful of here. The first thing I did was I calculated what the net book value was. Okay, so the cost was €25,000. The depreciation we're given in the question of €5,500, which means that we had a value of €19,500 on that vehicle when we got rid of it. Okay, we were given an allowance of €20,000 for something that we had worth €19,500 in our accounts. So that means we made a gain. Okay, of €500. Okay, and usually when you've got a gain, you add that into the profit and loss. So that's why I've written there. We're going to add it into our profit and loss here as well. Okay, so it's a gain. When you get rid of a vehicle, all of the depreciation that you have with that vehicle goes with it. Okay, so that's why I've written here that €5,500 needs to be removed from the accumulated depreciation of your vehicles. So you need to get rid of that 5,500 out of the existing accumulated depreciation. So that's 2 entries so far. Now we're going to need to adjust the cost, the actual cost figure of the vehicles. Well, we got rid of an old van worth €25,000, so that would be a minus, and we got a new one worth €35,000. So overall we're going to need to add in €10,000 to the fixed assets in the balance sheet. Now this part down here, you need to be careful that you don't forget that, because in question 1 you never really have to adjust the bank, but in this question you do. Okay, it usually says in your question 1 the check was recorded, and that was the only thing that was recorded for this transaction, but nothing has been recorded here. So what adjustment happened with the bank? Well, we got a new vehicle worth €35,000, and we were given an allowance of 20, which means that we had to write a cheque of €15,000. So you need to make sure you're taking that from your bank, but just be careful there with your bank, because you're in a bank overdraft. So if there's more money coming out, then you need to be careful of your signs. Okay, so let's have a look and see how that looks in your tab. May. So we have increased our vehicles by the €10,000. Okay, so that was the net figure. So we got rid of a van worth 25 and we got a new van worth 35. So we've got an increase of 10. Our vehicle depreciation, we're removing that. So that's why it's plus, you're adding it on, okay, because you're removing it. If you wanted to increase it, you'd be subtracting, but if you're trying to remove it, you're going to be plus. Okay, so just be careful of your signs. Down here, we've got the €500, the gain on disposal. Okay, so it's like an income. It's going to increase our profit. And then my bank figure. Okay, so be careful of this. We've got a bank overdraft of €24,000 and we've spent another €15,000. That's increasing the overdraft. So right now, our overdraft is the 24 plus the 15, which is €39,000 worth of an overdraft. So that's why you're adding it in. So just be careful again of pluses and minuses. Your total then for May is your 15,500 increase in assets and 15,500 increase in liabilities. We are now on June and it is saying we received a bank statement on the 30th of June showing a credit transfer of €4,500 to cover 9 months rent in advance from the 1st of June, bit of a mouthful, and a direct debit of €1,500 to cover advertising for the year ended 31st of the 3rd, 2010. So there's not a whole lot that needs to be done in our workings for this. We'll come back to this again in December, and that's what I was on about when I said about the 2 December columns. So the only thing I actually did in my workings here was try to figure out what bank figure should I put in, okay? So we've got a credit transfer received of €4,500. So we're getting money in of €4,500. We're paying a direct debit of €1,500, and a direct debit is when money is taken out of our bank account to pay certain bills. In this case, it was advertising, okay? So €4,500 is coming in and 1,500 is going out, which means we have a net figure of €3,000, okay? And we've €3,000 coming in, okay? The net figure is money coming into the bank account. So we would usually add that into the bank account. But however, because this is an overdraft, it's going to reduce our overdraft. So we're going to actually end up minusing it in the tabular statement, okay? And so I'll just go over to the tab now and show you how it works. So you can see here in this question that they've put in the 2 figures for bank. I'm telling you just to put in one figure of the €3,000 and as a minus. So instead of that, I'll just write it here, €3,000 minus, okay? Just be careful, that is the bank figure, so it's not creditors. So that is €3,000, okay? Your expenses due, you have to adjust because at the start of the year we were due expenses of due to pay expenses of €2,500. We're after paying €1,500, so I'm subtracting it, okay? So €2,500 was due at the start of the year. Now we're after paying €1,500, so I'm subtracting. Do not worry about the months. We'll come back to this in December, okay? So then I need to open up rent receivable. So someone has paid us in advance, okay? Rent in advance. That's not good for us. That means we technically owe it back to them. So that's why it's a liability. So I'm opening up rent receivable there of €4,500 in June. So I have a minus of 3,000, a minus of 1,500. That brings my total minuses to 4,500, and I have a plus of 4,500, which leaves no adjustment here and no adjustment here overall. Okay, so that's my June done. July then, it says a payment of €720 was received from J Murphy, a debtor whose debt had been previously written off. So we have a bad debt recovered here, and he wishes to trade with More Limited again. This represents 80% of the original debt, and the debtor has undertaken to pay the remainder of the debt by February 2011, which is within the next year. Okay, so what month am I doing? July. So we have received a bank statement and it says that we were paid a cheque of €720. So I'm adding that into the bank. Okay, so I'm adding it into the bank. It would usually be money in, but because it's an overdraft, it's going to be a minus. So just be careful of your pluses and minuses there again. If it makes more sense to you, which sometimes I think it actually does make more sense, have the bank in the current assets as a minus, and then you won't get as confused with your pluses and minuses. Okay, so €720 is added to the bank account, but because it's an overdraft, it's going to be a minus, okay, because you're going to be reducing your overdraft. So €720 represents 80% of the debt. Okay, so you need to try and find out, well, what was the full debt? And the full debt is always your bad debt recovered. So into your calculator, 720 divided by 80 multiplied by 100, which gives us the full bad debt that has been recovered is €900. And that usually would go in as an income if you were doing a trade and profit and loss account and balance sheet. Okay, it would come in as a gain. So the only thing that represents the profit and loss in this tabular statement is the profit and loss figure. So we need to add it in there to the profit and loss, €900. Okay, and that means he still has yet to pay €180, which he said is going to pay. Okay, so the second part of that question then says, on the same day, goods to the value of €440 were sold on credit to Murphy. Okay, so that means they were sold on credit, he owed us the 180 and now he owes us another 440. So in my debtors, I've got 180 that he still has to pay from the bad debt recovered, plus I'm after selling him more things worth 440. So the total amount that has to go into my debtors is €620 into my debtors figure. Okay, and we've sold goods and the goods were worth €440, so I need to remove that from my stock. So for this one, going into the tab, we're going to adjust bank, profit and loss, stock and debtors. Now be careful, there's no mention of cost price or any profits or anything like that, and it's different to 2017. In 2017 you had to deal with a profit, you had to deal with VAT, so make sure you're kind of practicing the different types of ways that it can come up. Okay, so July, let's have a look. It says, so we have to adjust the stock. €440 worth of our stock is now gone because we're after selling it, so that's why it's a minus. Right, so the 440 is gone from stock. Debtors, they're shown two figures. I want you to just show one, so we'll have 620 in there. Okay, that's those two figures added in. You'll still get your 4 marks, don't worry too much about that. Then we've got our profit and loss of €900, so that's our bad debt recovered. That would be a gain. And then in our bank, €720 because we got paid €720. It's a minus because we are going to be decreasing our bank overdraft by €720, and that's why it's a minus. So overall, the difference, the adjustment is €180 plus in both our assets and our liabilities. Next is our August. It says goods previously sold for €600 were returned, and the selling price of these goods was cost plus 20%. A credit note was issued showing a deduction of 5% of the selling price as a restocking charge. Okay, so let's have a look. It says that goods previously sold for €600 were returned. Let's see what we have to do here. So goods worth €600 were returned, and they were cost plus 20%. So they represent 120%. So you need to find out what they actually cost you. You sold them for €600, but that's not what they cost you to buy. So you need to find the cost price because you need to add the cost price back in to your stock. Okay, because your stock has to be recorded at cost price. So if €600 represents 120%, into your calculator put 600 divided by 120 multiplied by 100, which means the cost price, CP stands for cost price, €500. Okay, so you're going to add that into your stock. Okay, so you also need to adjust your debtors. You didn't give them a credit note of 600. You charged them a restocking charge. So the returns value was €600. Okay, and you charge a restocking charge of 5%. So 5% of 600 is €30. Okay, so that means the credit note that you actually gave them was €570. So you only reduce the debtors by €570, not the full 600. You're reducing it by 570. Okay, then you need to check and see when you sold these, you recorded a profit in your profit and loss of €100. Okay, you no longer have that sale, so you should really be reducing your profit by €100. However, you charged a restocking charge, so you should have been reducing your profit and loss by €100, but you held on to 30. So the actual reduction in profit is €70. So you need to reduce your profit and loss by €70. So let's have a look in the tabular statement and see how it looks. So we have our stock. We have that €500 worth of stock back in our storeroom. So we need to add that in. Our debtors, we are reducing by €570. So we've got a total adjustment there of a minus 70, and that you can see the corresponding entry then in your profit and loss of a minus 70. Okay, so you've got a minus 70 in your assets and a minus 70 in your liabilities. Next is September. It says a creditor who was owed €800 by more accepted equipment to the book value of which was €700 in full settlement of the debt. Okay, so first of all, you need to be seeing there is, well, we owed someone 800, but they accepted something worth 700. So obviously there was a discount received of 100 there. And the equipment cost us €1,200. So you need to be adjusting your creditors, you need to adjust your discount received, and you also need to sort out if you made, you need to be adjusting your equipment. Okay, so this is September. So the first thing I did was I said, well, the amount that I owed was 800 and the amount that they accepted was 700, so that means I got a discount of 100. And that would usually go in as a gain in your profit and loss, and the only thing in your balance sheet that represents profit and loss is your profit and loss balance. So I'm going to add it to the profit and loss balance. Okay, I used to owe someone 800. I no longer owe them that, so I'm going to remove that from the creditors. So I'm going to have 800 coming out of our creditors, 100 going into our profit and loss. Remember, we gave them a piece of equipment. So you need to remove the equipment from the fixed asset. And remember, when you get rid of a fixed asset, all of the depreciation that's with that fixed asset goes with it. Okay, so you need to take that 1,200 from your fixed assets. Okay, in the question it tells us that the cost and it tells us what it was worth. It does not tell us the accumulated depreciation. So your 1,200 minus your 700 means that this piece of equipment had €500 depreciation on it when we got rid of it. So you need to make sure you take that and remove it from your depreciation, because when you sell the asset, the depreciation goes with it. So what we're going to do here is we've got €800 reducing our creditors, €100 increase in our profit and loss. We need to remove the fixed asset from the equipment, that 1,200, because we gave that to the creditor, and we also need to get rid of all the depreciation. Okay, so let's look at that. September, we have the piece of equipment. We're looking here, €1,200 gone. Okay, we gave that away, and when we gave it away, the depreciation went with it. So you're adding back in the depreciation to cancel it out. So of the 1,000, you're getting rid of 500, so the balance there is still €500. Okay, which gives me a net figure of minus 700. Then down here in the liabilities, what happens down here? Well, we have €100 discount received. Okay, and we received a discount, and we are reducing the creditors by 800, which leaves my balance there as minus 700, which is correct. It's corresponding up there. Next is October. It says a dividend of 5 cents per share was paid on all issued shares. Okay, so the first thing you have to do is figure out, well, how many issued shares are there? So we had €440,000 worth of shares. Okay, and then we issued another 180,000 when we bought that business. So the total amount of ordinary shares is 620,000 shares. Okay, and each of those shares is getting 5 cent dividend. So the total dividend that's being paid is €31,000. Okay, so you kind of think to yourself, well, where does dividend usually go? It usually comes out at the bottom of your profit and loss if you were doing a question 1. So it's going to have to come out of our profit and loss. And what do they get? What is a dividend? It's money. So you're going to need to take it out of your bank account. So October, we have our profit and loss is going to be reduced by €31,000. Okay, because 31,000 of our profit is gone to the shareholders in dividends. So a dividend is where you give a portion of the profits to your shareholders. So €31,000 of the profit and loss is gone to the shareholders. That's why I'm subtracting it. And I'm increasing my bank overdraft. I was already on minus, and now I'm going to spend another 31,000, so it's increasing my overdraft. So minus 31 plus 31 leaves me with nothing, and I have no adjustment up there in my assets. Okay, November. In November, we received €100,000 from the issue of the remaining shares. Okay, so we issued the remaining shares. Now I'm just after calculating how many we already issued. So let's have a look. The total authorised shares, that's coming from the balance sheet as our authorised, is 700,000. Okay, so we are authorised to issue 700,000 shares. That's the maximum amount of shares that we can issue. Now I've just calculated up here that we've already issued 620. So how many is left? 700 minus 620. We have 80,000 shares left to issue, okay? And they're all valued at €1 each, so that's worth 80,000 euro. So if we issued all of the remaining 80,000 shares at their value of €1, we should have got 80,000 euro. But we got paid 100,000. So what's the difference? They obviously paid more than what they were actually worth, so that's called share premium, okay? So what we're going to have to do here is we're going to increase our ordinary shares, we're going to increase our share premium, and we received 100,000 euro. So when we receive money, that's going to reduce our overdraft, so we're going to subtract it from the overdraft, okay? So you're adding 80 into your share capital, adding 20 into your share premium, and you're going to take 100,000 because we were given that money, and if there's money coming into our bank account, that's reducing our bank overdraft, okay? So let's have a look. November. Right, so we have an increase in our share premium, our share capital of 80, increase of our share premium of 20, and we have money coming into our bank account, so that's reducing our overdraft, so that's a minus 100,000 euro there. So overall we have 100,000 coming in the pluses, and we have 100,000 in the minus, so that's no adjustment really, and no adjustment up here. Next is December, and this is saying that the building's depreciation charge for the year is 3% of book value, and the depreciation charge is to be calculated from the date of valuation and the date of purchase. And then it says that the total depreciation charge on vehicles for the year was 25,000 euro. Okay, so you need to adjust and find out the building's depreciation charge yourself, but the vehicles is given to us. So remember, we had a valuation at the start of this question in January, and we were revaluing the land and buildings combined to 700,000 euro, and it told us that the land part of this valuation was 90,000 euro. So if both of them combined was 700,000, and we know that the land was 90, the buildings on their own was obviously 610,000 euro, and we're depreciating that by 3%, which gives us a charge of 18,300 euro. But we had a building, and we got a new building when we bought that new business in February. So that building was worth 200,000 euro. The charge is 3% for the year, but we didn't have it for the year. We only got it on the 1st of February. So we're getting 11 months depreciation there, so it's 5,500 euro, and you're adding those two together, which gives you your depreciation charge of 23,800 euro. And we're going to add that to the accumulated depreciation figure, and we are also going to subtract from the profit and loss because it would be an expense, okay? And the only figure that we have for our profit and loss is that profit and loss balance, so we're going to pop it in there. We also have our vehicles depreciation of 25,000 euros, so we need to add that to the depreciation on the vehicles, and we also need to subtract it from our profit and loss. Okay, so my profit and loss adjustment, instead of having two figures, we have the 25,000 plus the 23,800, which gives me an adjustment of 48,800 euro. So let's have a look and see what that looks like. Now this is where you could have an extra December column. Okay, so if you want to have two Decembers, that's fine. I'm just going to use a highlighter to show you where these figures are coming from. There's going to be other ones that I'll go through now in a minute. So we're going to increase our land and buildings depreciation by 23,800 euro. So this is a minus, so to increase it I need to go with another minus. Okay, and the same then with the vehicles depreciation, 25,000 euro. Okay, so we've got two minuses there, and we also have two corresponding minuses here in the profit and loss, a minus 25 and a minus 23,800, and that's where I've told you to combine those figures to give you your 48,800. And again, like, we're going to move on to these now, but you can see that here they have four figures for the profit and loss, so it will be easier for you to use a second December column to do these guys here. Okay, so just to recap on that, we've got 48,800 up here and 48,800 down here, so that's your corresponding entries. Okay, and that is that done. Now these figures we'll go through them now, and you're kind of going back then to your transaction that happened in June. Okay, and you're looking at those expense and gain adjustments. Okay, so I want to talk you through them. Okay, so back in June we received a credit transfer of €4,500 to cover rent from the 1st of June. Okay, so, and that was 8 months rent, I think it was. No, sorry, it was 9 months rent. So it was €4,500 to cover 9 months rent. Okay, so €4,500 is to cover 9 months rent from the 1st of June. So how many months of those 9 months are actually for this year? We had June, July, August, September, October, November and December. But 7 months are for this year. Okay, so of the 4,500, that represents 9 months. I want to find out what 7 months is. So 4,500 divided by 9 multiplied by 7, or 4,500 if you want to do it this way, by 7 over 9. Okay, so make sure you're going over the 9 months, not 12 months, because the €4,500 is for 9 months. So that means 7 months figure. The figure for this year is €3,500. Okay, so of the 4,500 that was paid, €3,500 was an income in the profit and loss this year. Okay, and we need to record that in the profit and loss this year. And with the advertising, we have €1,500 paid, and that was for 12 months for the year ended 31st of the 3rd, 2010. So that means we're doing the accounts for 2010. So if that advertising payment was up to the end of March, those first 3 months, January, February and March, are for 2010. So only 3 months of that €1,500 is for this year. And that would be an expense in the profit and loss. So we need to show that as an expense in the profit and loss. So my profit and loss adjustment is here. We've got a plus €3,500 coming in from our rent received for the year. And we have a minus €375 for advertising for the year. So that leaves me with a net figure of an income of €3,125 in the profit and loss. Okay, so I'll just show you, and I'm going to come back and show you now, because some people can get confused with these, the expense one. Okay, so we have in our profit and loss, they have €3,500 coming in and 375 going out. I'm telling you just to put in your net figure of €3,125, and that would be a plus. Okay, now corresponding entries is this more straightforward one is your rent receivable. Okay, so you have of the €4,500 that we got in, €3,500 for this year. So I'm removing it from the rent receivable and putting it into my profit and loss up here. Okay, and the same with my expenses. I've got a minus because it's an expense, so it's a plus down here. Okay, and I'll show you where the double entry comes from. So we had €2,500 balance, minus 1,500 here, and plus 375 because that's this year's charge. Okay, and I just want to show you in T accounts these figures here. But before I do that, we've got a plus 3,500 and we have a minus 3,500, so they cancel each other out. And we have a minus 375 and a plus 375, so they also cancel each other out in terms of the double entries. So we have our double entries perfect. But I just want to show you in T account form why you are adding this guy in here. Okay, so this is a liability, right? So before I go onto my page, this is the liability here. So that balance is on the credit side. Then that would be a debit because it's a minus, and this is going to be a credit, and I'll show you why. Okay, so my balance, I've got my balances already in here. We have a balance of €2,500 and then we paid. So basically what that means, we owed €2,500 at the start of this year. Okay, then in June we paid a direct debit of €1,500. So that reduced the amount that we had due to pay. Okay, and that came from the bank here of 1,500. Okay, so the money came out of the bank account, credit in the bank account, debit in the expenses due account, right? Now, of that €1,500, we have calculated that €375 was for this year. Okay, so I need to say, well, €375 was for this year, and that is a credit, and I'm debiting then in my profit and loss of €375. Okay, so this was all done. These three were done before now. And now of this 1,500 that we paid, €375 needs to be included in the charge for this year. So 375 taken out of your expenses due, which is a liability account, which this side is plus and this side is minus. And this, it's the corresponding entry is a debit in the expense account, and that the rules of that are the debit is a plus, okay, and minus, right? So €375 needs to be taken out of, needs to be added into the liability account, and the corresponding entry then is in the profit and loss. So that is why I am adding in the 375 here. Okay, so, and then this is going in because it's reducing your profit and loss. Okay, and that's your double entry. Then your question is basically done then at this point. You would have calculated all of these totals as you're going along. So you just need to finish off your totals along here, and you hope that these two figures end up being the same.